Welcome back, everybody, to the Pleb Underground. Look at us. We're doing a double feature Friday. That's right, guys. Get ready. Take a seat. It's going to be a very interesting conversation. I have the founder of Epoch VC with me. Well, not with me, but virtually with me in the studio, right? I've got Eric Yakes. He is joining me to sit down. We're going to talk about some pretty controversial stuff, right? The Bitcoin treasury companies. We're going to talk about, even we're going to bring up the Michael Saylor stuff. I've got some clips that we're going to dive into, what his take is on this space, what is happening, because I know Eric has been around at least as long as I have, if not longer. So I'm very curious to know, are we really winning? Right? Are we winning? Anyways, guys, it's going to be a great conversation. We're going to dive into it. Get ready. Here we go. Pleb Underground is sponsored by Archimedes Emporium. Discover the pinnacle of precision engineering, starting with their Bitcoin logo wall clock, meticulously machined in Maine from a solid block of aerospace-grade aluminum, ensuring unparalleled durability and performance. Experience the difference of a product made without compromise. Head on over to Archimedes Emporium. Eric, thank you so much for joining me on Pleb Underground. It's absolutely amazing to have you. How you doing today?
Dude, the ad that you just showed for Archimedes Emporium with that clock, I want that. I'm looking it up right now. That's sick. I hadn't heard of that. That's a great sponsor.
I appreciate it. So that's Cypher Safe, actually. He, I don't know if you remember him. He was making essentially seed plates once upon a time, but then he decided to shift over to doing some nice artistic work. And yeah, I'm very fortunate, man. He's been my sponsor for, since I started Pleb Underground. So cool. Yeah, man, I really appreciate it. Good stuff. And thank you for the, that ad was a fun one to come up with, because at first I was doing them all naturally, and then I'm like, you know what? I don't think I'm saying this as well as just showing how well this process is, right? Watching the process is way cooler.
Yeah, that is super cool. I'm looking at it right. I'm definitely, it's only $150 too. I'm definitely gonna buy one of these. Cool, man.
Cool, good stuff.
Okay. Yeah, man, I'm good.
Hey? Good. Starting 2026, starting off pretty well. I've noticed that you're pretty busy. I see a lot of solid tweets, a lot of solid takes, maybe even considered controversial.
Yeah, I think, since I started my venture fund, 2024 and then most of 2025 was probably the hardest I worked in my life. And I just been grinding, and I miss the old Bitcoin Twitter days. And I missed just spending a ton of time on that app and talking with people and saying what I want. But I kind of fell off in terms of spending time on it. And now that I kind of have my feet under me and a little bit more time on my hands to start re-engaging with the community, talking about things I believe in and thoughts, I love it, man. I love it. So I've definitely been giving my opinions a lot more on X, and it's been I enjoy it.
Well, I can tell you, I've definitely missed your presence on Twitter. And in fairness, when it comes to missing Bitcoin Twitter, I miss Bitcoin Twitter also, and I'm there all the time because there's definitely been a major shift in terms of narratives and terms of, I wouldn't say incentives. I wouldn't say the incentives have changed. It seems to me the incentives are the same. But I think that, how could I say this? They're kind of morphing into their final form, So what I'm trying to say is that I bought the narrative once upon a time of separating money and state. And now what we're seeing is seemingly Bitcoin supporters bending the knee and kind of asking for the state, right? And kind of saying, you know what? We'd like to work with the state. So anyways, I just, it's a bit of a shift of a narrative that I wasn't necessarily prepared for. I'm not blaming anyone. It's my own fault, but definitely wasn't ready for that. What are your thoughts? What are you feeling about this?
So let's take a step back. When you think about a system, when you think about anything that grows, right? there's different stages it goes through. There's different beliefs that it holds. When you think about like, when you think about when you're a kid, what are the beliefs that you hold about the world? What do you need at that point in time to better understand the world? It's different. It's just very, very different. When you're a kid and you're just like, you have spatial reasoning. You're just trying to figure out what objects in front of you even are before you can even actually start thinking more deeply about other questions. And I think that like we're a system. We're a complex system of all these different variables. And I think that as you grow, the things that you focus on, what you need to hear, the negative consequences of that and the positive consequences of that change. And like in Bitcoin is like I'm drawing this parallel because when we're witnessing the emergence of a new monetary good, it requires different things at different points in time. It's like if you anything that like if you start a company and you say like, well, what do we need to get like the first 100 people using our product? Well, what you're doing, what you're saying, what matters is completely different than when you're getting, the first million people to use your product. And I think like when I like, cause like the worlds that I deal in, right? Like I'm a VC and I'm talking with family offices who are looking at like, plebs watching this would laugh their ass off at hearing some of the conversations I have with people that are just like completely removed from our industry and the perceptions they hold about Bitcoin, the things that I talk about, what I have to explain. Like, that's kind of what I view a lot of what we're doing in VC is I'm convincing all of these people to attract more capital into our industry. Like that's where I'm kind of like in the trenches battling. And, in like, when you think about starting the like a company and how it's growing over time and what changes within it, you realize that okay, when I'm talking to some of these people and I'm explaining where we're at today, and like you'll hear some people will be like, oh, like the Bitcoin maxis or whatever, these people are ideologues or they're myopic or something like that. That is something where it's because they don't have the same context that most people do about history. In the same way, when we explain Bitcoin to people and we have to go explain the history of money for them to have the right context of even understanding why Bitcoin's valuable. It's a similar thing for you to understand the modes and behaviors of different people in this industry. You have to have a certain proper context before you can really get into it effectively with them and say, no, people behave this way for a reason. Like when I first got involved in Bitcoin, I had a similar, I came from like an investor background and I was always like, Bitcoin's the only thing that matters that I'm going to focus on. But I was like, I don't know why everybody's so angry about all the other stuff. It's just like, dude, let them do them. And let's focus on just winning at what we know is the right thing. And I think you spend more time in this industry and you realize, well, no, it's not like these are separate worlds. The reality is that, and it affects me on a day-to-day basis. I go talk to some investors, for example, and I'm like, hey, let's talk about Bitcoin. And like, oh yeah, well, I invested in this crypto fund years ago and I got burned. And I don't know if I like that. And I'm like, no. Like, this is different. And now I have to deal with all the bullshit that happened in that industry. And it's like these worlds aren't removed. What they do negatively affects us. And there's a reason that people are so against it because it does impact us. It is our problem to some degree. And like people don't understand the history of why that is. And like you work in the industry and you start a company and you go actually like try to do something, you start a podcast or anything, you start to very quickly realize, oh, well, it really does matter. And you kind of can see why like some of these cultures have emerged in the first place, because if you are trying to build, a new monetary good for the world and you want that to be sustainable and you want to do that without, causing a bunch of problems for yourself or for the others or whatever it is, or branding for Bitcoin, then it doesn't matter a lot of these things. And like, so I like, that's context, but I see all of that, right? Like that's important. And that's something I learned as I got more involved in Bitcoin. But on the other end, on the other side of this, right, is we need companies. If you similar ideas, like if you ever go try to build a company, you realize that there isn't some like straight path to doing that. You know, if you say that I want
Yeah.
the biggest podcast in the world, and it's just like, well, you have to start in a niche in this one area, and then you have to grow within that niche, and then, you know, maybe you're going to expand into something that's next to it, and none of this is obvious to you in the beginning. And like the people who eventually get to that end goal are people who've hopped around through the zigzag way and found some incredibly unclear path because they've worked hard and they've persisted and they've done all this other stuff. And I think that's a reality too, is that if you do, like, that's kind of like the man in the arena analogy, where people are like, hey, you know what? It's easy to be the peanut gallery on the side and talk shit about what people do and their beliefs and their behaviors. But it's like, at the end of the day, if you're a man in the arena, then I respect you. You're trying something, and that's a hard position to be in. And the path is never clear, and the narratives change and the ideas change, because you don't get to sit in an ivory tower and just have opinions anymore. You have to deal with the feedback that the market gives you. And if the market gives you negative feedback, then you're fucked. And like, that's the most important thing. So it changes the way people behave. And what I'll notice is that there's a big distinction between people who are typically like building things in the industry, and then people who just kind of like own Bitcoin and have, you know, ideas about it. And both of them are valuable, and both of them are needed. And like, I've gotten to have, I guess, the reason that like I'm in the position I'm in, where it's like, we're a VC, I'm investing in companies, but yet I still have a lot of opinions on things that I think are probably not typical of somebody like me in the industry. And I think it's more just like, I have a very meta view on everything. Like, I just view everything a little bit more from like a third party perspective when I see people's opinions and narratives on stuff. And I'm just like, look, you might have some opinion where I'm just like, that doesn't make sense to me, I don't believe it, but I see why you exist in this industry, and it's very valuable that you exist. Like, we needed somebody like Max Kaiser to start all of this. Like, we needed people who had this like cult leader mentality to like perpetuate ideas that really describe to people this like big vision of what this whole industry could be. And now Max Kaiser is probably not going to go get Larry Fink to put money into Bitcoin. And maybe people don't want that in the first place. But the way that I view things is, Bitcoin is simply something where it's going through this zigzaggy path of adoption, and a bunch of people are all starting to get exposure to it. And the value of Bitcoin going up is far and away, more than anything, the best marketing tool for it. And that as long as we have technologies that allow people to hold it themselves, and they can, you know, buy it amongst one another and trade it peer to peer, in one way or another, Bitcoin's just like water. It's flowing through these cracks. It's going to happen. And we can have, you know, large forms of adoptions through institutions, and that's just making number go up happen. And that's making more people realize that, hey, this thing is very, very valuable. And then one day, maybe they end up going down the rabbit hole, or they don't. So like, the way that, like, to bring it all back, the narrative is shifting in a way that isn't really controllable. It's just that, you know, that's kind of how it goes. And different people have different narratives within different communities to this point. The way that I view it all from like a bird's eye view is just, Bitcoin's just expanding. It's expanding into a bunch of different areas. And then some of those people might dominate the perspective on X, and some other groups might dominate the perspective on Nostr. And there's different, like, you go talk about Bitcoin on LinkedIn and see what people are talking about. Like, that's a cesspool. Like, who the hell?
Yeah.
That's weird, you know? And like, so it really, in our annual report that we put out to our firm, there's this guy, Fernando, who's the head of marketing at Blockstream, and he spun off and made this website called Perception. And it's perception.to is the domain. And it's really cool because he's doing a ton of meta-analysis on like narratives about Bitcoin. And that's what the website is. And you can just like look at all this. And we did a whole like 2025 in review in our annual report to say like, and we put up like, he's got like numbers to quantify this. Depending on the channel that you view Bitcoin through, determines what you think is happening with it in a very significant way. Like, the guy who listens to Bitcoin podcasts, the guy who is going to Bitcoin conferences, has a completely different view of where Bitcoin's at right now. and what happened in 2025 than the guy who's like reading the Wall Street Journal and has a little bit of Bitcoin in an ETF. And it's so much of it's determined by the media that you consume, is what your perspective is or what you think the overarching beliefs people have really are. And the way I kind of view it now is just Bitcoin's just expanding into everything. And it's too hard for me to really keep track of all of it at this point, to be honest.
Yeah, and to your point, right? It is totally growing outside of any individual group or person to be able to control, I believe, any narrative to any effective degree. It's all different, the different market participants. But I'd like to go back to something that you said, because you were talking about, when you put out a product or a service, or you try something and then you get the market feedback, and if the market feedback tells you it's negative, well, you're kind of hosed. So I'm very curious, what do you think the market feedback is? It's actually a two-part question. What do you think the market feedback is on MSTR at this point? And the other piece to it is, did this space go in the right direction, backing the overall idea of the Bitcoin treasury companies?
So,
because we're going to go in that direction now. We're going right there.
I can't wait. Okay, so the market feedback.
Yeah, the market feedback.
The market feedback is that the price of it's significantly down, right? From some point a year ago. And that makes sense. I think it's kind of trading as you'd expect. The market feedback on MSTR from a price standpoint isn't as much feedback on MSTR as it's what's the market feedback on Bitcoin. And everybody who owns Bitcoin is like, why is this dip happening? Because we live in our world of perception. And that's awesome. I love that we live in our world, because our world is the world that buys it when it's down. And that's a world you want to be in. So we're in the right world. But the reason it's down is because there's all these other channels of perception that exist, and a bunch of other people have a very different opinion right now. And they're listening to different media sources, and they're concerned about quantum computing risk, or they're concerned about macro liquidity, and yada, yada, yada. So that's kind of how I view it from a market feedback standpoint. So yeah, it's like negative from that perspective. But it's really just trading as you would expect it would be trading in terms of like the price of it. Are we going in the wrong direction? Well, I want to make sure that's how you phrased it. Like, we're going in the wrong direction with the Bitcoin treasury companies.
Did we go the best route with the Bitcoin treasury companies? I'll make it more open instead of leading it fully in that way.
Yeah. So like, and that's another thing. Well, I'll like my first response to that is just like, did we go the best route? It's just like, we don't know it. Like, it's easy to assess the best route in hindsight, right? Here's what happened. People found a way to get some sort of value. And we had, Michael Saylor create this company, which really didn't have, like, the strategy itself didn't have much attention other than like, Bitcoin's valuable. This guy owns Bitcoin. And then that grew. And then it got to the point where he's like, is there a way for me to raise capital around this? Is there a way for me to take equity, which is kind of like an infinite opportunity cost of capital, whereas getting like a preferred equity or a credit product like an unconvertible note, these things are fixing your cost of capital. So it's pretty much just ways to say, like, we know that the math of Bitcoin is that Bitcoin's going to grow at X% rate into the future, and it's going to be a lot. If I can go find money that is at a cheaper rate than that to buy Bitcoin, then that makes sense every time. If I can pay 12% and I get, whatever called historically 50% compound annual growth rates of Bitcoin, then the spread between that's good. So not only can I sell my chair, but then I can go borrow more money. And so he's like, okay, I can come up with that. And I did that. And everybody's just like, damn, this is free money. And now we have this whole like free money glitch that everybody tried to hop on the train for. And some other companies in other jurisdictions were successful at it. To answer the point directly, did we go the wrong direction? I think that people buying Bitcoin is good. I think that I think the reason that people get concerned about, large institutions owning it and in a more like centralized fashion is because I think one of like the primary things that people are pretty fallible with is viewing systems statically and not dynamically. I do it all the time. It's like hard to catch yourself doing. But when you understand that like there's so many arguments in Bitcoin where I'll see it all the time where people talk about like credit in the future of Bitcoin and in like banking systems and all this stuff. And when something happens in a market, then that information gets incorporated into the market that then the future participants of that market respond to. And that's what makes it dynamic because the state's constantly changing and people are reacting to that changing state of the market. So like Satoshi made these arguments and in the white paper, very similar of like dynamics when we're talking about like a 51% attack on the network. And like Satoshi in this like very succinct way described what I just said in a very complex way. The individual who puts that amount of money to have miners for a 51% attack, he ought to find it more valuable by playing by the rules of the network than to attack it. And like, that's right. Like, I think that same incentives apply to anybody who has a large stake in Bitcoin. It's like you get a large enough stake, then you stand to benefit so much from Bitcoin's success. And the larger that stake becomes, you realize, okay, well, if the size of the stake itself is the problem, then whether it doesn't have to be you, it's just people in the market that are observing you. They're going to be like, okay, well, this probably isn't good. Let's create an alternative. Let's create something else. So like more treasury companies popping up in other parts of the world, I just view that as more like distributed ownership of Bitcoin in other parts of the world. And I think that it brings people into this question of like scope. Like that's one thing that I've teased out in some of my writing is like true. We want Bitcoin to be as distributed as possible across every stakeholder group that participates in it. Like that's our ideal. That's what we want. That's easy. When you view the like term decentralization though, how decentralized any, taking a step back, any system is it kind of a lot of it is a question of your scope of that system. What lens are you viewing it through? What level are you viewing it through? Because what I can say is that if I look at it from, your family has its own multi-sig that owns Bitcoin. And if I look at it through the lens of your family, it's like, okay, well, that system has, 4 or 5 people or something that all control this piece of Bitcoin. But if I zoom that out and I say, okay, well, now there's millions of families all over the world who have that. It's like, oh, okay. So zooming out from that perspective, it's pretty decentralized, even though at the family level, it's still very centralized. So when you view it from like a systemic level, it's like, sure, we could have millions of companies that own Bitcoin around the world, but that's still just like decentralized ownership of Bitcoin. The bottlenecks come down to like custodians and like, is everybody all holding that Bitcoin in Coinbase or something?
Well,
yeah.
Sorry, I just wanted to jump in. I mean, isn't that to your point about the custodians, especially the majority of these Bitcoin treasury companies? Again, we assume based on chain analysis that has been done and confirmed, there is a certain large portion of them that have actually purchased Bitcoin, but the majority of them, to my knowledge, all custody it. So they're not, it's not even really being used as, and again, I guess this goes back to your point about the framing, right? Like to me, that's not really holding Bitcoin, right? Like that's just it's just like a show until they take self-custody. So, but I'm also looking at it from the, the idealist Bitcoin hodler.
Yeah.
So to speak, right. But anybody else who supports the Bitcoin treasury companies and believes that they are a quote unquote net positive, well, they don't care who the hell is custodying it. They just want these companies buying Bitcoin.
Right. Right. So like by them, like what it does that benefits Bitcoin and thus the stakeholders in the network as a whole is that treasury companies are buying an asset that's now fixing that asset in a custodial position. So now it's like that asset is now relegated at that custodian and is not moving into the market. And that's making Bitcoin from like the marginal seller standpoint more scarce. All that means is complex, it's a complex way of just saying that that's good for number go up, like what you said. And I view that as beneficial. It's like when you're fighting in the trenches for something, like going back to the company analogy, it's just like you take what you can get. You take whatever you can get. It's never perfect either, right? Like, and that was Sailor's point, despite my tweets and stuff like that. Like,
yeah,
that's Sailor's point is he's just like, guys, like, look at what you're getting mad at people buying Bitcoin. It's like there's fiat, there's regulators, there's people attacking human rights. Like there's a million people to go get upset about. And like, why are we going after the people that are buying Bitcoin? And like that point does resonate with me. There's this tweet is what I'm saying is I don't think he handled that conversation correctly, but I do think he's right that it's just like, if you want to support Bitcoin, then go after its enemies, go after like the very serious enemies of it. I don't think that treasury companies as a whole are necessarily the best thing for Bitcoin. It's just like, what's the best thing for Bitcoin? A bunch of people buying it in non-KYC peer-to-peer exchange all over the world at any point in time. Like that's the ideal, right? But we know that that's not a reality that's ever going to happen.
But let me ask you this, right? Is it really actually so this is the whole thing, right? About the whole the criticism of of Sailor's comment, right? Where he said, Danny, why aren't you going after these businesses that don't buy Bitcoin? But is it actually a good thing, so to speak, if you've got these broke companies or companies going broke that essentially can't actually afford to hodl and accumulate Bitcoin consistently into the future? Is that actually good? Like for Bitcoin, so to speak. And that's why it's not about criticizing. Like for me, the way I see it, I guess maybe it's a bit of a more nuanced take. It's not about criticizing the businesses that don't buy Bitcoin. Of course, like fuck those dudes. Like they suck and they should be buying Bitcoin. There's no question there. They've also got melting ice cubes. Totally agreed. But instead, what we're doing is that since we're not getting those guys, it almost seems, I shouldn't say we're not getting those guys. We're not getting them in en masse, right? So what we're supposed to cheerlead for this, like these broken horses, these like, I'm sorry to say, it's like glue factory horses. Like, so it's, and again, I'm painting with a broad brush, so I do apologize because I know there are good, solid businesses that are buying and accumulating Bitcoin, putting it on their balance sheet. I talk about it every day. And of course, there's the big ones that people know, like Block and Mercado Libre and a few others. And these guys are just, they're hodling, so yeah, there was a question in there, but I lost it because I get all passionate about it.
And I think the point that you're like bringing up is important. Like, so the question's like I think the primary point here is like what does it mean to say, is this a good way of owning Bitcoin? And I think like the primary distinction comes down to, is it a sustainable way of holding Bitcoin? Because if you were to like, let's push it to the extreme. Let's say you go take, you're just some like degenerate who goes and takes 100x leverage on Binance and buys Bitcoin. It's like, cool. Now you've just like pushed demand into the market and Bitcoin crashes 5%, you get liquidated. And now it's like pulling that back out of the market. So it's like creating these little blips. And like, that's what we've seen historically that's created a lot of the volatility within Bitcoin is, large degrees of credit moving into the market and expanding it rapidly and then contracting. And then it gives it a bad rap because people are like, oh, it's this like crazy gambling asset who are all observing it from the outside. It's like, so we have these very like unsustainable forms of ownership that will enter the market at points in time. And like, is that good? And I agree. I don't think it's ideal. I don't think that the reality though of these treasury companies is you have a handful of the larger ones, that were able to actually do something other than raise equity capital and buy Bitcoin with it. There's like, I think like 5 or something. Yeah. And like, you look at that and it's like, okay, who's kind of built like what we call out in our report is like Metaplanet. Metaplanet grew their stack a ton last year. And they actually have a business of like selling, very far out of the money derivatives on their Bitcoin stack, and that pays salaries of all of them, and they actually earn a net return on it, and they're compounding their Bitcoin stack through it. So it's like they have what we'd call that in my world is they have an asset management business. Like that's what these guys really are. If you look at guys who are managing assets, like that's what you're trying to do is earn a return on capital that pays for your salary and gives more back to investors. And that's a true business. That's a sustainable business. So I'd say like Metaplanet's good on that end. And then some of these other ones are spending a lot of money, and it's like, yeah, is that sustainable? Were they just kind of yellowing in and taking advantage of a perception in the market? Yep, probably. And is that going to be sustainable? I mean, we'll see. We'll see what the capital market's getting to. Because what could happen too is Bitcoin goes up to 150K over the next like 3 to 4 months, and then all of a sudden their stock prices are flying, and now they're raising loans, and now they're
more equity.
Business, and like, and I expect that will happen. And I'm glad that they still own Bitcoin. And I don't wish ill will on them, but there's guys who I think are doing a much better job. And then there's just a bunch of people who came into the market and tried to like hop on the train and like raise capital, and like, you don't even know their names or where they are or whatever. And like, I don't know. It's just like, to me, I agree. Like, I don't think that it's a huge deal. In our 2024 report that we wrote, that came out like January 2025. Like we were making the points about all this. We're like, look, this trend's going to blow up. And it's kind of like, the new shitcoin market. And it's a lot of people with very like, shorter time preference that are trying to like, have more gambling, higher levered plays on this type of stuff. And we'll see a lot more of it. We kind of thought that there would be more credit that got raised around it. And that's kind of what surprised us, is that actually didn't happen. So I guess some of the people that were writing loans were either, I don't know, that they were either dumber or smarter than we thought. It depends on how you frame it. But what ended up happening is that the majority of the capital came in through equity, which we wouldn't have guessed. We wouldn't have guessed that. We thought the money would have came in through credit, but it was like, no, a lot of people just want to buy the circularity of the stock. Yeah, I mean, hey, if it works, it works. Like the market's dynamic, and now we've kind of witnessed it. Now there is an appetite for it. And if Bitcoin runs up, maybe it'll come back. Probably won't. I'm guessing that if it does come back, then it's going to be more people raising through preferred or through credit the next time around. But yeah, I think that it's not something that, like, if you read our most recent annual report, we're hard on the companies. And like the reason we are is because I don't view myself as some like, arbiter of truth or anything. But what I care about is efficient markets. Like if an efficient market wants a treasury company to exist, and that's great. But what I want to make sure is that to the points I was making at the beginning of like the negative outcomes that crypto have had on Bitcoin, like I want that to still exist. Like I want us to protect like the brand, and the way that happens is through, and it's true in every market, information transparency. Like the more information transparency in the market, the more efficient and competitive it becomes. So what I wanted us to do in our report is be like, look, I want people buying Bitcoin. If you're a company and you can fix your cost of capital and you can own it, and you can earn a return to like your investors because of it, then like more power to you. Go buy equity, go find efficient tax vehicles within different markets like Metaplanet did that give people a more tax efficient exposure to it, or go find markets where like people can't even get access to the Bitcoin, and this is giving them access in the first place. Like, you want to go play these games, do it, get people owning Bitcoin, but we're going to make sure that information transparency is going to be efficient around it. Like that's like the role that we want to play in the market. So we like put a chart up and we say like Nakamoto spent so much fucking money last year, and Strive spent a ton of money last year, and that's cutting into the Bitcoin that they could be owning for their shareholders, and everybody should know that. And I hope that they don't spend as much next year, and I hope they can buy more Bitcoin and raise capital. Yeah, I mean, that's my take on it. What I'm worried about more, and like what we do as a firm, is we need to build more ways for people to buy Bitcoin. We need better technologies for people to move it instantaneously around the world and privately. We we need more of these things to happen in a way that meets customers where they are today. And that's such a hard problem to solve. And there's a lot of people fighting for that. It's like, if you're like us and, you know, you're like this obsessive autist and you spend all this time in these niche internet communities and you're learning about all this stuff, like that's awesome. But the billions of people around the world don't do that. And like the companies that are meeting people where they're at and finding ways to get people to eat their vegetables without them knowing it. That's a really hard thing to do. So like those are the problems we care about. That's what we focus our time on. And I think that the market, the second you have the right technologies, the market will work itself out over time. And eventually people are going to be in everything that we wanted. But I think that does come from us like building the right things and the right avenues for people to get exposure to it in the right ways. And I don't think that's a clear path. I think it's a zigzaggy path. I think a company that starts as a centralized exchange is in a much better picture to like deliver the right tools to people in the future, to millions. Like perfect example, Block, you know, massive centralized payment company, Bitcoin balance sheet, them rolling out Square terminal payments is like massive for medium exchange of
Agreed.
Bitcoin. And that came from them doing a bunch of things that aren't necessarily a part of the Bitcoin ethos or in a completely different world to then be in the position to benefit Bitcoin in that way. So like, that's that example of like not a clear path.
And I just want to, I hate to be critical, but it's just, I can't help it. It had to do with Block, right? Like that was one thing I called out immediately, was that Steak and Shake isn't even a payment processor. They don't have the infrastructure that Block has. And they were just like, you know what? Let's just have customers pay in Bitcoin, and boom, they've got Lightning terminals, they've got the machines. Like, I'm sorry, but it's fucking embarrassing, man. Like, if I was like, what the hell was going on? And then, of course, Jack Dorsey, God bless him, he actually wrote me back and was like, he was telling me that that there was a whole bunch of regulatory hurdles and all this stuff, and I was like, hey, man, like I get that, but to me, it's like this other company, they didn't have these regulatory hurdles. They're setting it up for payments. But maybe it's because of their infrastructure and the type of business that they are. Maybe that's where it created more, more red tape, so to speak.
Yeah,
I don't know about that, so I'm guessing.
The devil's in the details with all the regulatory stuff. But the reality, when you are like when you are a third party that is moving money on behalf of two other parties, and you're taking control and custody of the asset, then you have to go get a bunch of licenses. When it's your own money that you're dealing with, when you're just like accepting the payments yourself, then it's your assets. So you're not a third party, and then you don't have to go get money transmission licenses. That's a key difference, is when you are a third party providing payments, the regulatory environment it's terrible. And that's there's so many companies where it's like, you'll have like based Bitcoiners kind of working inside of it that are pushing for it. But the regulatory environment is the regulatory environment, and those are kind of battles they're fighting. Yeah.
I want to go back to a point that you made about we were talking about because I'm not done with the Bitcoin treasury companies yet. You were talking about wishing not necessarily, but the framing of critics possibly wishing ill will, so to speak, on these Bitcoin companies, these treasury companies, wanting them to fail and stuff like that. And I just wanted to at least clarify, at least provide my my point of view on that, is that indeed there are some people who frame these companies as evil, right, or good, or this type of thing. But the reality is that we know that businesses are much more complex than that. It's not about good and evil. It's really about incentives and profits and a whole bunch of other mechanics. Now that being said, right, of course, it's like the people that criticize MicroStrategy, it's not criticism out of wanting them to fail. It's criticism out of wanting them to succeed, because as a Bitcoin hodler, right, even though I know it's TikTok next block, I also understand that we live in a material world, right? Like it's not like it's like you can't just pretend. And the reality is that if these massive institutions that are buying Bitcoin and hodling it and creating these derivative products against it, if they begin to fail, especially MicroStrategy, in a massive way, well, look, that's not good for my bags. That's not good for Bitcoin, for overall perception, so to speak. I'm not saying it's a tragedy in the grand scheme of things where we never come back.
Existential. Yeah.
Yeah, exactly. It's not existential. However, it's going to be a kick in the nuts for a while where we're stuck hobbling for a while. So I just wanted to at least clarify that like, indeed, there are some pockets of people that like, fuck these companies and this and that. I feel that sentiment sometimes too. However, at the same time, I don't actually want to see them fail. I want to see them build out operating businesses. And this is going to go to your point. So you made a video that singled out that you invest in businesses that have operating cash flows. So I'm wondering why did you go that route, which to me seems significantly more difficult than the easy route of the Bitcoin treasuries?
Yeah, that's the right question. So when you look at how certain strategies why do people see value in MicroStrategy? Because it's a levered exposure to Bitcoin. And it's like, okay, we can be pretty certain, like, let's whatever, you'd look at like their current leverage at, take a step back. It's like, if you had 1% leverage and 99% is just Bitcoin ownership, then that's better than just pure Bitcoin ownership, not self-custody aside and all that, but just like the economics of your return. So you can expand that to some degree and you can get some sort of like more optimal return. So when you look at a business, there's two different types of leverage that you can get in a business. The first is financial leverage, and that's what most people are familiar with. And then the other is called operating leverage. And operating leverage is what people more frequently think of as like economies of scale, or like different factors where other costs components in your business are fixed. So if you have a business where it's like a perfect example of a company with like what made software businesses so successful and made big tech, kind of like eclipse Wall Street and some of these other areas of like being the most valuable sector in the world, is because like software has such a massively high degree of operating leverage. That means that the second you build it, the marginal cost to create more of it's like zero. So you do costs and then you have no more costs associated with it. So like that's why venture capital all started focused on software businesses. Basically like this industry that's like, okay, we see that operating leverage, particularly in this new world of tech, is something that we can capture significant value from. So like when I was starting our firm, it's not like you have some simple decision, right? It's not like you have some sort of decision of like, here is, it's not as simple as just like, will this outperform Bitcoin? Okay, then I'll do it. It's like, you have to look at the world when you're doing anything, right? And you're just like, what do I care about? What am I good at? What are people not doing? And you have to look at like this confluence of all these complex decisions to like really make the right choice on, okay, what should I be spending my time on today? And like for me, from the world that I came from, it's like, okay, I can add a lot of value to Bitcoin because I come from, the private equity world. I understand how a lot of these financial things work. I know how the people think, what they do. I have relationships in that area. I can attract more capital towards Bitcoin. I wrote my book and that helped a lot of people in that community understand that thesis from the way that they view the world. And it's like coming into venture capital, the big vision that I see with it is that, and this is, very aligned with, I think, broader, beliefs within Bitcoin since, earlier days of the Bitcoin base layer protocol is not something that can become this like neutral financial system for the world in isolation. It needs an ecosystem around it. It needs things to allow people to buy it in the first place amongst one another. We need things like the Lightning Network. We need other protocols that integrate with it that allow you to move it faster or do other things with it, or, plug it into other systems so that, people in TradFi have access to it on their systems. And like, you need it to spread. It's like, Bitcoin, with the analogy we use in our ecosystem report when I describe it, is like any system is a tree. you know, it's this thing that just grows, and it has different resources, and it has roots that just keep spreading in all these different directions. And we have ecosystems are like that. And it's like, there's this physicist from MIT, Adrian Bijan, who, you know, formulated this idea of what he called the constructal law. And like, it's a much more complex definition. But like the law is just like, how do systems construct? How do they construct themselves over time? And it's that they grow by following the path of least resistance. And that's completely predicated upon the environment that they're in. So that's why we see, you know, evolution work the way that it is. It's literally just like systems growing for the environment that they're in. And like what we're doing is we're creating things that they enable that growth. They allow the water to flow in different directions so that it can keep spreading and spreading and spreading. So that's what I view like Bitcoin is like an ecosystem. That's this financial system that we're talking about on top of it. It's all these things that allow you to do it and spread everywhere so that we can kind of call this thing a new financial system. And then we can create like the first neutral monetary system in the world. Like that's the big compelling vision. That's what I care about. That's what I wrote about in my book. I don't want Bitcoin to become digital gold. And like somebody on a podcast a few days ago asked me, like, what do you think the biggest risk to Bitcoin is at this point? And the biggest risk I could see happening, it's not like quantum computing. It's not any of these things. Like, I think that we have plenty of solutions for that. The biggest risk is that Bitcoin only ever becomes digital gold. And I don't think that's something that puts checks and balances on governments and institutions. And I don't think that's something that creates a monetary revolution. I don't think that that's bringing a lot more freedom. I think it's bringing some, but it's not what it could be. And a truly neutral financial system is like, that's what changes the world. That's what it creates all these ideals that we value. And so the venture capital side is like, that's how you fight in the trenches on that today. That's what we're doing is like, we're trying to attract capital so that we can invest in companies. And if you look at it, what attracted all the capital that we're competing against? Crypto companies. And how they do it? Shit coins. And because what that did is it created the first time in like the history of venture capital where up until the emergence of like tokens, venture capital was always something where people were like, okay, you can get like really high returns investing in these startups and capturing a ton of the operating leverage where you invested $1 million or $2 million in their valuation, and then they become $1 billion company. Now you have like a 500x over like, 8 or 9 years or something it took you to get there. And like, that's the goal, is that you have these like unicorn type investments and you get absurd returns from doing it, but you're taking on a ton of risk. And like the bigger thing to like an investor who's like, well, I could go buy stocks. I could go buy gold. I can go buy bonds. And like, there are all these liquid markets where they could go sell that, within a few days of when they decide. Venture capital is not like that. You're stuck in these investments for really long periods of time. So they're super illiquid. And tokens came in and like, no, now you can get exposure to a software company and you can liquidate it in 6 months if you want. And what did that do? It created this very like perverse incentive in crypto where they're like, well, dump on the market. And then like, and we've seen it all unfold. We've seen what's happened to the VCs, and we've seen the boom, and and that's something that people are well aware of now, that like Bitcoiners were kind of screaming into the void on not all that long ago. And that's actually been a great thing to see, is like the markets become more healthy in a lot of ways. I think a lot of that's died off. It still exists, but like it's not nearly what it was when you'd see people on CNBC promoting these like direct scams and shit. Like that's not really happening as much anymore. But I think that so that attracted a ton of capital into crypto. So like when we're like, okay, no, we're like focusing on legitimate companies. We're doing a traditional venture capital model. Really, we're investing in like financial technology. But like broadly, it's like, what are we doing? We're getting exposure to Bitcoin adoption. Like that's what we're doing, is that Bitcoin grows in price. And there's also a lot of other things that grow alongside it. The users, the amount of people that own it, that has grown significantly. Look at these charts going from, a few hundred people in the beginning to, hundreds of millions at this point of people that have exposure to it, or just like, millions of people who have self-custody to it. There's a lot of very like high growth metrics when we look at like the volume of trade that's existed of it over time. That's grown very, very rapidly. When you look at like how much credit and things like that have grown around it. Bitcoin loans that allow people to perpetually like hodl and still get liquidity on their position and like pay a price for doing that. These markets have grown very rapidly. And I think that like, that's what like, so like selfishly from like an economics perspective, the reason we chose this and what we believe in is that we want exposure to the operating leverage and the financial leverage of Bitcoin's adoption and growth. Like that's what we're getting exposure. It's like another component of the system. Now, whether or not we do that well remains to be seen. It's going to be 5 years.
You're executing.
We see that, but like that's the view. Is I think that if like when Bitcoin goes where we know it's going, then I think we're going to be invested in really valuable technologies and financial institutions that are associated with that adoption and growth. And what I love about all of it is that it's what Bitcoin needs to make it that neutral monetary system. And it's aligned with my vision and my values. I think we're like, I'll surely get criticism publicly in the future is because, to my point I was making earlier, is that paths are never straight. And we'll probably invest in things that are, not on that straight, perfect path towards the adoption. But we do always have the best, intentions in mind for where we think that could end up going. And in the sustainability of the value that something brings, if you read like our report, the like investment philosophy paper I put out a year and a half ago when we were starting the firm, Bitcoin Marginalism, I get into that of like the sustainability of something is important for us. And, I think that on the time horizons of like 5 to 7 years for an investment that we're currently targeting, that's enough for us to realize whether or not something is a sustainable practice. But, we're writing off short-term wins and things like that. Like, some funds I think invested in the Bitcoin treasury companies, and we talked about that internally, and we're just like, not the business that we're in, not something that where we can see a sustainable aspect to it over the long term. Might do well. But that was something that like we avoided and didn't kind of go chase a shiny object on.
I appreciate that. I really appreciate the in-depth response on that. It's good stuff, man, honestly, because I just feel like you're a unicorn. Yeah, I'm not trying to glaze here. I'm just saying it's, there's very few people that are taking this much harder path of attempting to identify businesses that are essentially going to shape the things to come, right? So you're kind of betting on a future that you don't see yet, but that you're feeling around for, and that's difficult.
Yeah.
I mean, it's like crossing the abyss, right? You don't know what's on the other side, but you can't. You got no boats, so you can't go backwards. So here I go.
Yeah, that's right.
We do have a question. Here. A couple of comments here. Question from Torip Hodl. He's saying, how does fiat VC companies stay fiat mindset when they can even look for, if not Bitcoin, to be difficult from every other fiat VC? I think he means different. I don't know. Question. I don't know, Torip. I don't know if you can rephrase that one. I'm not 100%.
You got to rewrite that one, bud.
Sorry. I apologize, but that's okay. Hopefully he'll rewrite it. Let me ask you this while we're waiting and we're talking about the Bitcoin treasury company. So you had mentioned BlackRock. Do you believe, though, because this is the thing, I noticed that there's certain businesses that seem, and in my eyes, the Bitcoin treasury companies fall into this bucket, that they are essentially working towards this Bitcoin is only digital gold future. Would to me that's, and again, you mentioned that the path isn't straight, so maybe it just seems this way to me right now, but I just find it strange, right? That like all of these businesses with all of this money, like instead of actually going and putting funding into attempting to develop Bitcoin or to grow, quote unquote, adoption and or the parallel economy, like they just went to the easiest place to drop their money, right? It's like you just put your money there and wait instead of having to build. So you believe that businesses like BlackRock and the Bitcoin treasury companies, are they working towards that Bitcoin is digital gold only future?
Yeah, that's interesting. So because BlackRock is a single company and we know the CEO and we've heard things he said publicly, I guess it's a little bit easier for us to kind of speculate on the intentions of Larry Fink. I hadn't verified this, but I heard this in conversation recently. I know I did verify that it was like Bitcoin was like a top 5 most profitable product through the ETF for BlackRock. But recently somebody said it's now the most profitable product. So that tells you everything you need to know. And I think like I see that and I go,
least resistance.
Fuck yeah. Like you guys, you know, you want to see that. Now, like really like this negative view that we're talking about. I don't know if you ever read Ben Hunt's paper from Epsilon Theory. Like, yeah, the ISR and like that paper. I remember when I was first starting off this industry and I was thinking about businesses related to it. That's probably one of the most impactful papers that I had read on me that allowed me to have like the framing. And one of his quotes in that really stuck out to me of like, as Wall Street starts to turn Bitcoin into this financial product, this is going to have the same freedom enabling impact of like a bumper sticker on your car. And it's like, and that was cool. Like it stuck with me to this day, the way he said that. And I'm just like, yeah, like that's something, like these aren't things that get me excited. Like there's a reason that I'm not somebody who's like, I want to go work. I have the background too, right? It's like I could go work with one of these institutions. So like those views in isolation don't get me excited. But and this was another point that like Saylor made in the interview with Danny. And he's just like, you're saying that that's what these treasury companies are going to do. Now, like some of these treasury companies are just saying that like a perpetual model of like raising capital and doing this will sustain. I don't believe that's true. I think markets are dynamic. I think things will adapt. There's some theoretical ceiling of how much credit you can raise to where the credit markets no longer want to give you more money.
That's right.
Nobody knows how big that is. We don't know how much.
We're going to find out.
Yeah, exactly. Adam Back made the point too. He's just like, as it gets bigger, it could continuously become more appealing, which is a bit of like a, circular view of like how it could grow. But, who cares? Like, I don't know. It's let them test it. That's not the game I want to play. So I think like these treasury companies, or I guess like with the financial institutions, I think that they see a bigger vision. I think that what Larry Fink is looking at, and if you look at, money talks, right? So if you look at where the money has gone, this product is huge for them. And then they've been investing heavily in crypto infrastructure for like real world assets. And I think that he views the world of wanting to control a lot of the pipes and rails, or not even necessarily control. I don't think he's sitting there twisting his mustache like, I want to control all this. I think he's like Larry Fink wakes up and says, I'm the CEO of the largest financial asset manager in the world. I'm going down in history for this. I want to do things that make me bigger and better so that I go down in history for this and my legacy lives on. Like, I think that that's really what's motivating him, and making a ton of money while doing it and being powerful and in control. So like I don't think he's like, I want to create some sort of like Orwellian state with these products, but I also don't think he's like either trying to have any sort of prioritization of like freedom based on those incentives. So, but I do think that like the incentives are aligned to where if we recreate the same financial system in the new system, then it's not going to be as valuable and it's not going to be competitive against the old system. So I think that that's like a selfish incentive that will push him towards wanting to have the like exposure economically to the infrastructure of things that are, an alternative to the current financial system. But like, that's kind of like how I see his mode and incentives going. So I think that that's like, it's bigger than digital gold. Like, I think he's excited about Lightning Network, increasing the throughput of Bitcoin and ways that, they can invest in infrastructure around that. Like, I think that that'd be a good thing if it got on his radar. I think that, shitcoin tokens and those types of markets are something that he probably doesn't care as much about. I think what he cares about is like, we want to have exposure to the company that built the rails that Treasury repo settlement is happening on through tokenization. Like that's what he's thinking about right now. And he thinks that they can make a ton of money as a business from, you know, being that type of a financial service firm. The Bitcoin treasury companies, I think it's just like when you're starting a business, you could say like, you know, I want to create the next biggest fintech for Bitcoin in the world or something. And the way that you start it, like every startup that we will talk to, if you're just trying to go after your end goal in the beginning, then you're going to fail. It's always too big of a vision. You have to start with what's a small little thing I can do today to get my foot in the door, to have some sort of business that allows me to then eventually start building towards this longer term vision. So from that perspective, I think you can apply similar logic and reasoning to a treasury company strategy of like, what's this thing I can do to get my foot in the door? Well, I can get a huge balance sheet right now. That's what they were thinking the last year. Like, capital markets are loving this. We can go raise capital doing this. I can go get a big balance sheet. And then now I'm in this really competitive position to where if I do want to go start an operating business, I can go do that. And I actually have money, whereas before I did not. And that's a huge advantage. Like I was having a conversation with a friend not too long ago, and we were like, what's the most valuable skill that you can have in business? And one of the points I was making, and I don't know if you can quite say it's the most valuable, but way up there. So I was like, the ability to fundraise. And what that really means is the ability to be persuasive, the ability to convince other people of your ideas, because it doesn't matter how good your idea is or how capable you are of executing on it. If you don't have the resources to begin it, you're never going to start. And like, that's what people see. So like there's a competitive advantage that they gained from doing that. And we'll see what they do with it. A bunch of them are going to fuck up. A bunch of them already have fucked up. Some are probably going to make some smart decisions. Some of them might end up doing something really valuable for Bitcoin one day. So like it is, I think it's too hard to like paint it all with a broad brush. But like as a venture fund, I could see these companies buying some of the businesses that we're helping start right now at some point. And they'll be like, okay, we have a ton of Bitcoin. And it's like, what's a business that would benefit from having that needs a ton of Bitcoin in it? And if you look at like a lot of the financial infrastructure businesses, they're like, okay, instead of using Swift wires for international cross-border settlement, we're going to use Bitcoin because it's way quicker. It's more direct. We don't have to deal with the bullshit banking system the whole way. And the way that you do that to like integrate it with your users where they're at today is you have a bank account in one country, and then you have a bank account in the other country, and then you don't move it through the banks, but you swap it into the banks at each end. So I have my dollars, and you know, Jack Mallers has talked about this system through Stripe. I think he used that like peanut analogy at one of the conferences or something. But you get to circumvent the whole system, and you get more like movement of Bitcoin and use of Bitcoin of moving it over that. And then you swap it in and out of bank accounts. So those types of businesses where it's like they'll receive dollars from their customer who then wants to send it to India and then off ramp it into the domestic currency there. They're gonna be like, okay, well, we need somebody to swap the Bitcoin with us. And it's like, oh, so if I'm a treasury company and I have a ton of Bitcoin, I can be the guy that swaps that Bitcoin with you. And then you guys will pay me X% to do that swap every single time. Now I have a business of capital for Bitcoin. Oh, wait, why are we giving up the margin to that company? Why don't we just like buy that company and keep the margin for ourselves and then use our massive Bitcoin balance sheet to do it? So like one example, I think we'll start seeing stuff like that. And I think we will see operating businesses, and I think it'll be good for Bitcoin. But there's going to be a ton of bullshit along the way. And
we're definitely seeing that. We're definitely seeing that bullshit happen. And man, this hour absolutely flew by. I didn't even get through half of the stuff I wanted to talk to you with. But you know what? I'll just, if it's okay with you, I'll bug you to come back on the show another time, because I really do appreciate your time. But man, thank you so much for joining me today. And Eric,
likewise, man, this was a great chat.
Thank you. Thank you so much. I really hope you have a great weekend. And guys, that is going to do it for this live chat with Eric Yakes, the founder of Epoch VC. Guys, have a great weekend. I'm sorry that we couldn't get to all the questions. We're going to have Eric back. We're going to get into more contentious conversations. This is good stuff. definitely makes you think, and I appreciate your broad view and your ability to explain these details that really helps pull it all together, right? Like I think you have a very level-headed take, and I appreciate it.
Hey, thanks, man. This was great. I love the questions that you're asking and bringing this voice into the podcasting community on Bitcoin. It's awesome, man. Thanks for having me.
Awesome. Thank you so much. Guys, take it easy. Stick around if you can, Eric.